Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody, and welcome back. Sorry for the no screen. Let me get it pulled up for you here today. Good morning. Welcome back, everybody. Thank you for being here. We are back in the studio for another news event, of course, as well as general market commentary. We have quite a loaded plate here today and a loaded plate for the rest of this week. And don't you guys love that intro? Man, that intro. There's one intro. As a YouTuber, I've had several intros and things like that. That intro never gets old. It's really quite. It's the perfect songs, the perfect spin of all the different cool activities that A1 Trading has been involved in. It's quite the quite the intro. Anyways, today, guys, we've got a loaded plate, like I mentioned. Let's pull up some stuff here. We've got CADJPY, of course, on the radar here this morning. CADJPY and JOLTS job openings. Both of these key economic figures will be important to pay attention to this morning. JOLTS job openings, of course, probably the bigger one of the two, but still for the CAD traders, we have GDP numbers this morning, which will impact several currency pairs that have to do with the CAD. And yeah, we'll have to see. Am I going to make it to JOLTS job openings? Let's see. At the very least, maybe we can get Frank in here, help us out. Maybe we can try to do a long stream today. It's a stretch, right? We're going to try and stream from GDP numbers, which come out in about 8 minutes, all the way till JOLTS job openings. That's a long stream, but I think we can do it. I might pass out, but I think we can do it. Anyways, let's jump into some stuff here, guys. As you join, we've got 165 people. If you're enjoying the stream, do me a quick favor, hit the thumbs up button on your way in, and hello, welcome. Let's jump into some charts. Of course, we've got to talk about some CAD pairs. We also got to just talk about the dollar here for a second. Dollar continues to be strong yet again, right? Is CAD GDP really that important? It is if you're looking at the Canadian dollar. It can have impact. So it is worth noting and worth paying attention to. So that is, of course, why we are here live. All right, so DXY, the dollar index, starting out here this morning. You can see we hit support and have stayed strong above it. So we'll have to keep an eye on this dollar progression. But again, right now, price action just looks so strong. And because we have a little extra time here today in the stream, we'll be taking a look at a lot of different things. I'll take a look at a lot of different charts. Real quick, guys, as we're getting started here, comment which charts you would like me to look at, and I'll do my very best to get to as many as I possibly can. Also, we will be doing our giveaway at the end of today's stream. We've been promising to do a giveaway for the EDGEFINDER. We're going to be giving away one person a free copy of this EDGEFINDER. I'll tell you guys more about that in a moment. Once we have someone on deck to help you guys out with the trials, which I'll explain more in a moment. Anyways, we got some requests. We've got gold requests. I'm short Australian dollar. Nick, can you look over NZD USD? And dollar yen keeps doing me dirty. Maybe we can help there. Maybe we could take a look at some things. JP225, that's a possibility. Again, with a long stream, we have a lot of stuff, a lot of room to look at things. What indicators are you using on TradingView? I really don't use indicators at all. The only one that I do occasionally use is our own indicator. This beautiful little cloud that we created, we just call it the A1 Momentum Indicator. Gold members, you guys get this for free. And if you don't already have it, please message us on our website and ask for it. It is free to gold members. Just a cool momentum indicator I like to see. It just generally shows you a current trend. For example, we're looking at the dollar, and you can see this dollar every time it's pulled back into this cloud. It has been seemingly a really great buying opportunity. So You guys have some good requests in the chart. I'm looking through them right now. We got Euro Yen, Dollar CAD, S&P, NASDAQ. Of course, you guys know I love my indices, so we will be taking a look at indices. All right, let's jump in, guys. Let's jump into some charts. So, starting with the dollar again, right now, price action pretty tough to dispute here. Price is really strong, right? Each time it dips, this is a strong market. And as we trade here this morning, the dollar seems to be breaking out yet again. So let's make sure we're looking at the daily chart as well. Daily chart is really important. We talk about that often, right? The daily chart. Why is daily chart important? Well, the daily chart is important because a lot of bigger institutional traders, a lot of intelligent money, right? They don't day trade, right? A lot of big money does not day trade. They position trade, they swing trade, they invest. And so generally the most popular chart across the whole medium, investors and traders alike, is probably the daily chart. So you have to keep an eye on the daily chart because it is going to paint a picture. Right now, the daily chart for the dollar looks really strong. And I really don't see it having much of a headwind until we get up to 105.5. So that's a little bit of a tough case to be made that I think, the dollar trying to top here. I don't see it topping just yet. It seems so incredibly strong. Turin, thank you very much for the $1. One Myanmar. Is that correct? Is that the currency? One MIR. What is that? Malaysian ringgit. Thank you very much for the donation. I appreciate that. Yeah, so here's the thing, guys. The dollar on the daily chart looks really strong. It looks like it has room to expand up to areas like 105 and 105.5. Now, is this the recent high? Well, kind of, but it's not the real high that we have been, we saw during the peak of the rate hike fears kind of going on, which was around 114. So in terms of the dollar right now, is it bullish? Well, I would say yes. I would say the dollar bullishness looks poised to continue, right? I think we have room to come up and expand into these areas. So this is part of the reason why I have not been shorting the dollar, and I've been very off the gas pedal. You guys know I was very short biased in the dollar during this time. I took a lot of gold buy trades, a lot of index trades to the long side, which benefited from a weakening US dollar. During this time, I took some losses, took some L's on gold longs, but I abandoned that, thankfully, before the dollar strength continued. Because again, when I say what I'm talking about here, guys, for the newer traders, dollar strength generally puts pressure on gold, right? So a lot of you guys trade gold. I trade gold myself. And when we look at this chart and we point out that on the daily chart level, right, we could put in daily resistance 1. We could also put daily resistance 2, right? These are key levels off of the higher time frame that I think price has room to expand to. So when we're talking about these levels, right? What are your open positions, Nick? I'll go over them. Don't worry. We'll take a look. We've got plenty of time here. We've got 2 minutes before the news, though. Don't let me forget that, guys. We will be reacting to CADJPY to see if there's any volatility there. If there is, of course, there might be some trading opportunities. Dollar breaking out here today, again, looks poised to continue. Looks like it has room to run. This is not something I'm looking to short. If anything, short term, I think there may even be buying opportunities on the dollar upon retests, right? Of course, I'm not going to chase, but this was a beautiful buy. I mean, it's hard to deny this dollar strength is pretty dang consistent right now. So let me make sure I don't miss this CAD news, guys. Again, we've got CADJPY coming out here in just a moment. We'll be here watching this, and then I'll go over some of my positions as well as things to pay attention to. So let's talk CADJPY here. We've got 39 seconds or so. We'll come back to that. Let's pull up the dollar against the CAD. We'll make sure we keep tabs on this one here. And in fact, what I'll do is I'll go through my 4-part here. We've got about 25 seconds here, guys, and then we will watch here. So maybe we can roll our breaking news 20 seconds out. All right. And we are coming in here Got the 15-minute chart open, Euro CAD, CAD Yen, Dollar CAD, top left. Let's see if we get any volatility off of today's CAD GDP numbers. All right. Numbers should be coming out here. Dollar CAD dropping a little bit. CAD strength coming in against the Japanese yen. Euro CAD down a bit here. Trading 15 pips down so far. Dollar CAD, not too much of a move there, about 11, 12 pips, 15 pips at the max. CAD Yen trading off the lows by 17 pips or so. There's a little bit of volatility here, guys. Let's go take a look at that number and see what we've got. Okay, so CAD GDP came out at 0% compared to the forecasted contraction by 0.1% month over month. This is actually slightly better than expected for Canada, right? So what would this do to the Canadian dollar? Even if you don't trade the CAD, guys, this is good stuff to practice, right? CAD, GDP, the economic numbers, the economic growth came out flat, but the forecasts were for shrinking economy stuff, right? So that would be generally considered bullish for the currency, right? Of course, in this case, the Canadian dollar. So what do we see happening to the Canadian dollar? Here it goes. The CAD Yen shoots up. The dollar gives back some gains against the Canadian dollar. And the euro gives some gains back against the Canadian dollar as well. Is this going to have a lasting impact? Well, it's not really huge news. Generally speaking, GDP numbers for Canada are not going to move the markets massively, but it is still something useful, especially if you're paying attention to the CAD. We have someone coming on the show here today. Chandler, I would ask also, Chandler is our producer behind the scenes, ask Ivan or anybody else who would like to come on, as we do have an extra long stream today. I could definitely use some co-hosts to help elongate the show a little bit. But yeah, so reaction to the news here. CAD strength did come in slightly, nothing massive. Though you can see the dollar against the Canadian dollar giving back some of its gains here. So let's jump back into some charts. We'll continue where we left off. We were talking dollar strength. Of course, that leans towards what does it do to gold? And guys, do me a favor. As we take a look at gold, I want to get you guys' opinion as an audience and direct your attention to the chat with me. This will be interesting. Comment in the chat. Are you guys bullish or bearish on gold? Let us know in the chat. It's always a good thought experiment to share with the group and see kind of what the crowd is thinking. What is the rest of the community here on YouTube thinking? And while you do that, I'll walk through some of the time frames together on the gold chart. We'll go through this together. And again, comment right now. We're doing this together. Comment whether you're bullish or bearish. So Prad says bullish for gold today. Mila says bullish. Pi says bearish. Ella says bullish. Jimmy says gold. Jimmy, you didn't follow the instructions. We're talking about whether we're bullish or bearish. You got to let us know. We're all on the edge of our seats waiting for you. Yeah, pretty flat on the gold market. Neutral, bearish. Okay, cool. So what I hope you guys get out of my streams, by the way, is, we're going through charts, and sometimes I do charts for the community, meaning there's stuff that I'm not trading myself, but I still go over them just because I think it's a good thought experiment. Some of you guys trade one pair. Some of you trade GJ. Some of you just trade euro dollar. Some of you trade gold. Some of you trade NASDAQ. Some of you trade S&P. The point here with these streams is that even if you don't trade the assets that I'm talking about, there's still some value, I think, in just simply listening to the mindset, listening to the conversation, listening to contributing factors. Before these streams, I'm doing constant research to try and keep you guys informed with what might be moving the markets. Of course, this is part of my job, right? This is what I do. I'm a podcast host on Market Insights podcast, right? Of course, I've got my YouTube channel here. I'm a commentator on what's going on with markets. So with that, I'm constantly doing research. So I'm hoping that even if you don't trade these assets, you're staying up to date, you're staying informed through my videos and streams. As hey, I'm doing it anyways, you might as well listen in and get that same updates, just, handed over to you kind of thing. Anyways, let's take a look at the gold market on the daily chart. And I'll give you guys my take on it currently. So gold shot up, right? part of the story here. Bank crises, right? Regional banks under serious pressure, and a lot of concern came in that the regional banks, many of them would collapse. Some of them actually even did, and even got bought up by some of the bigger banks, the major banks like JP Morgan, Wells Fargo, things like that, right? Well, that fear has since kind of dwindled. But on top of that, we've also seen a lot of dollar strength as rate hike forecasts have actually increased outlook or probability that in the June 14th meeting, I believe it is June 14th, we have a meeting for the Federal Reserve where we will be seeing whether or not the Federal Reserve chooses to raise rates. Well, the probabilities for those rate hikes have actually gone up, putting downward pressure on the gold market as higher interest rates in a simple form. If you have the choice between bonds that yield higher yield, and that's basically, safe, quote unquote, investing, or you can put your money in gold, which yields nothing. If that yield continues to rise, it's sort of a opportunity cost to, let's say I'm 65 years old and I'm looking to retire and I want to park some money somewhere. Do I want to buy bonds? And I've talked about this many times on my channel, bonds, or do I want to buy gold, right? Which one do I want to buy? Well, if bonds are yielding like 2%, I may go ahead and just park some of my money in gold, right? But if bonds are looking much more attractive, like they are kind of right now, and they're yielding somewhere like 4 to 5% per year, the issue here is that money ends up flowing more into here, and people sell gold and they're like, nah, let's get rid of the gold. Let's go into bonds because we're going to get money for our money, right? That's the concept. Yeah. Nick has both chats in front of him. Yes, guys, if I don't respond to a comment, please do not take it personally. There are currently 308 of you, and there's one of me. And I do my very best to read the chat, but I miss stuff. So if I miss it, don't worry. I will usually either come back to it, or if you say it again in the future, I might see it then. So my point with pointing this out, guys, is that gold has been on a downward pressure recently because of the further rate hike forecasts that have come in. So here's the price action of the 4-hour chart. And I love the 4-hour chart because it gives me, it's not so long-term as the daily chart, but it's not too intraday where I'm, you kind of lose me. I'm not really an intraday trader. However, my streams I know are watched by a lot of people who are intraday traders. And I think that we both get value out of the 4-hour chart. So let's go through the 4-hour chart. Again, 4-hour chart looks very bearish, right? We've seen consistently strongholds by sellers just get pushed back down, rallies, and we saw this quick blip here, by the way. I think that this was sort of a hot debate point for some other brokers where they may or may not have had that spike. Awanda got questioned on that a little bit. I'm not too sure about what happened there, but regardless, my point with sharing this is that right now gold continues to be in a downward trend. We have sellers who are still in control of this market. Now, when I say in control, what I mean is that we're seeing that price either trade sideways or slightly up before getting pushed yet again to new lows. Lower lows, lower highs. The simple textbook analysis stuff that I talk about here on this channel, it's not all garbage, right? Sometimes people like to think that if they make it super complicated, then they know some secret, price action strategy that they're going to suddenly beat the market and be amazing at this stuff. No, I think you could really use the simple technical analysis stuff, because technical analysis only works if a lot of people use it and believe in it. It's a self-fulfilling prophecy, right? So we all see resistance. We say, okay, yeah, that's a selling point. Sold off, right? That's how price action works, is because it's human psychology. It's understanding that a lot of traders are looking at the same thing. If you try and get too fancy with it, you're looking at something that nobody else is looking at. And is there really any value to that, right? If everyone sees that 1980 as a strong selling point, what do you mess around with 1991 for, right? Or you get the point. Anyways, sell pressure still in this market. I would say a couple things to watch out for. We do have some support levels here for gold traders around 1941. This level has been actually pretty impressive. We had a little bit of a Wyckoff spring, if you want to call it that thing, whatever some people call it, liquidity grab, doesn't matter. Price went under the lows, shot back up, back into this kind of range that we've been trading in. Regardless, though, gold has a lot to prove before I think it goes bullish. And a lot of the lower time frame traders, right? If you're trading the 15-minute here today, you might say, well, hey, gold looks really strong, right? Gold's been putting in. Yes, it does if you look at that one time frame. But you have to remember that off the 4-hour chart, we're still in what I would consider a seller's market. And we are trading awfully close to some levels where sellers are still very much in control of this market. For me to be a bull on gold, I need to see bulls capture some of the same levels of resistance that they had in the past, right? So again, for example, this 1980 mark, if price is able to break higher on this, that's perhaps something of interest. Also, on the back end side, Chandler, if you don't mind, we have JOLTS numbers, and I think we're going to try and stream all the way to it. It's still an hour plus away, but we are going to try and go for the full route. If you don't mind, Chandler, on the back end, if we could change the title and thumbnail to something for that JOLTS number, I feel like that would also bring in more people who are preparing for that news event. We have, again, JOLTS numbers coming out here. And this is a big one, guys. We've got JOLTS job openings coming out at 10 a.m. US Eastern. Why does this matter? This shows us, guys, the number of job openings in the United States. Okay? This is really, really important stuff because the job market is something that the Federal Reserve will be watching very, very closely. Right? If they see strong jobs numbers, it may lead them to raise rates further. If they see jobs numbers cooling, they may hesitate and wait to raise rates or perhaps stop altogether. This number today is exceptionally important as the Federal Reserve is making its monetary policy going forward. Okay? So, yes, we will be live for the JOLTS numbers. They are probably one of the more important numbers this week. And let me know, Chandler, also, do we have anybody in the office who is on deck on the rep side? We are going to be doing our giveaway. Some of you guys are asking about the giveaway for the EDGEFINDER. Let's go through some EDGEFINDER stuff here as we get going. And we will also, of course, be talking about the EDGEFINDER giveaway. But we will be doing that at the end of the stream. So not yet. Okay. All right. No worries. So let's do this. In terms of the EDGEFINDER, let's take a quick look at just where things are at currently. So we have JP225, which is strong buy, USD ZAR, Swiss yen, dollar yen. We got to take a look at this dollar yen, by the way. I've got to keep an eye on that one. Dollar yen, dollar CAD. These are listed as strong buys on the EDGEFINDER right now. Oil is up there. We've got the 10-year, pound Aussie, dollar Swiss, euro yen. And guys, feel free to pause the video or the stream if you'd like to screenshot what I'm looking at. You guys can always do that. Of course, without purchasing the software, you guys can watch the content and always keep an eye on it. It's just that I might not always look at the things you want. So again, we're a software company, Atlanta, Georgia. We build software tools for traders. They're not all free, but again, it is because we spend multiple six figures building the software tools that we offer. So we have to have some way to recover our costs and even make money for the company. But we build tools for traders and we show them on the live streams all the time. So just being here, you get that free value. Anyways, some strong sells, still a lot of sell pressure on the dollar. And I think we need, against the dollar. Let's go take a look at some of those like Australian dollar, euro dollar, pound dollar. These things, we discussed them in length yesterday. Look at that euro and look at this, guys. Euro trading back underneath the lows. It's an impressive sell-off here. For intraday traders who are watching the euro here today, one thing that sticks out to me is that you had this kind of falling off a cliff effect, right? Real quick selling. Now you're getting the recovery move. You're getting the pullback. The question is some key level like this, that 61.8%, which was a key level of support, will that now act as a potential level of resistance? That's going to be the question. So we'll keep tabs on that. I'm going to come back and talk about this euro dollar move. But before I do, real quick, let's drop a commercial break just to thank our sponsors here, 8cap, who make these streams possible. We'll come right back. We'll talk about the euro. Don't go anywhere right after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and there you go. A word from our sponsor, 8cap, who you can get a free copy of the EDGEFINDER for if you want to hear more about that offer. Again, you can get free access to the EDGEFINDER. Click the link that just got dropped in the chat and ask us about the EDGEFINDER giveaway. You may have to wait just a moment. We are still waiting on support reps to get into the office here today. But back to this euro dollar concept. So let's see where we're at with this. So the euro dollar here, trading off of the lows by a substantial margin, right? You've got a little bit of a pullback here, 25 pips off the low, give or take. And the question is, where is there potential selling opportunities? Again, off the 4-hour and the daily, I like it to the downside. The euro has been really, really weak. And, it's one of those things. The dollar strength is just so persistent. And from a price action standpoint, I like this trade. Where I don't love it so much is the institutional side of things. When we take a look at the smart money tracker, what would probably keep me from shorting specifically the euro is that institutional money loves the euro right now. So what we're looking at here is the COT report data. So I mentioned our company is a software company. We build tools for traders. A1 Trading, you can look us up on the internet if you'd like. Well, with the COT report data, what we do here is we pull COT data from the CFTC and we then visualize it into a simple to look at chart so that we can analyze it together. So what we're seeing here is that right now, the euro is 76.6% on the long side of things, meaning that institutional money is very long when it comes to the euro. So I don't really love the idea of trying to short the euro at this time. The dollar, however, is also pretty long. You've got just about 67% long overall when looking at the US dollar. So I don't have a strong preference there. By the way, guys, don't go anywhere because we do have JOLTS jobs number coming out. It's over an hour away. We will be streaming if I can make it that long till that point. I will do my very best. These streams are pretty exhausting, if I'm being honest. But at some point, I'm hoping that I get some help, that we get some additional people to join the stream here today. You guys know I love to have guests on the show. It's a lot of fun. By the way, guys, if you're enjoying the stream, hit that thumbs up button real quick. And again, JOLTS job openings, we will be around for that stream here in just a bit. Did we get a thumbnail for that too, Chandler? Yes, you did. Chandler, you are the man. Look at this. Look at this, guys. So now we've got this showing up. This is awesome. So Chandler got us a new thumbnail. That's so cool. So while we were on air here, Chandler got us switched over to a new stream title, a new thumbnail, mid-stream, which is awesome. So we've got JOLTS job openings. That's our next news. We started out today, for those of you guys who are just joining, with CAD numbers coming out. So now we are switching gears and preparing for JOLTS numbers. Chandler looks like he's wanting to say something. He's in the back of the studio. Chandler, what's going on, man?
Oh, I just wanted to show up and say hello to everybody. I'm the only one in here and the lights turned out, so I'm a little scared.
Chandler is in here. So for those of you guys who are just tuning the stream, I'm in the studio office portion. I'll show you guys. Let me see if I can just go full screen here for just a second. So you can see I'm in like the studio office, and then Chandler is out in our main area and he's manning the booth. So he's helping out on the stream side. So all the thumbnails and the content and putting things together. Yes, you guys know and love Mr. Chandler, the editor and producer.
Yeah, I wasn't moving enough, so the lights think there's no one here.
Yeah, we have those things, guys. We have like the sensory things, sensory lights where they turn off if nobody's moved, or like if it doesn't see any movement for a while. So yeah, we'll have to. I don't know. It's kind of nice with the lights off, to be honest.
It is. It's a little moody. You know, it's a little rainy outside. I got the construction guys keeping me company.
Yeah, true. We've got construction right outside.
I'm reaching out to a lot of guests, guys. So hopefully we'll see some guests showing up soon. I haven't heard anything just yet, but you know, we might get some surprise visits. You never know. But yeah, we're doing a big old stream today. Jolt's job opening.
Yes, indeed. Well, thanks, Chandler, for jumping in. And yes, Chandler always keeps us running smooth here. Sometimes smoother than others. Sometimes we have internet problems and other things. You guys are probably familiar. If you're a regular, you know stream difficulties are a real thing. But nonetheless, we're here. And thanks, Chandler, for jumping in. So let's keep going here. I wanted to talk more about some more dollar pairs. So we had Aussie dollar yesterday. The Australian dollar against the United States dollar. Tom spoke to us from Simply Forex. He came on yesterday and he was talking about his Aussie short. I don't know where he's at this morning. Maybe he's off, I don't know, doing something. He lives out in Dubai. But if he shows up on the stream, which is a possibility, if he does, Tom was short Australian dollar. And I think he's probably glad that he was, because this thing has continued to roll over and a nice, really quite the nice structural break here this morning. Take a look at this. So we've got the Australian dollar. What was a support level here, which rallied very nicely, ended up coming back, testing a few times before ultimately breaking down overnight. Overnight for me. Yeah, so it continues to look bearish. For those of you guys who are watching the Aussie against the US dollar, this is one, however, I'm more interested on the short side. So I mentioned euro dollar. I'm probably not really interested in taking a trade, but Aussie dollar is a different story. Let's cross-examine the US dollar versus the Aussie dollar and take a look at this. So when we look at the Australian dollar, what we can see is that institutional money is very short. And when we look at the US dollar, we can see institutional money is very long. Specifically, we have 53,000 long contracts for the Australian dollar open and 102,000 on the short side. So clearly there's a strong preference for institutional traders to be short the Australian dollar. Whatever their reasoning is, doesn't really matter, but they are very short. And that tells us that they have a vested interest in this thing continuing to decline. We analyze this data each and every day on the stream. As soon as we have a rep in the building, I will be telling you guys how you can enter the giveaway, and we'll keep you guys posted on that. So, yes. So yeah, when comparing the Australian dollar, guys, let me make sure I'm getting a message here. I'm trying to coordinate our podcast. Forgot about 10 a.m. that we're going to do. 10:05 live streaming. All right. So unfortunately, I just signed myself. Well, not unfortunately. It's going to be fun. But after this long stream, I'm going right into a podcasting episode. So at 10:05. That is fantastic. I am on a podcast. Yes, indeed. If you guys don't know about the podcast that I'm on, does anybody listen to podcasts? Let me know in the chat. Do you guys listen to podcasts? Just type yes if you're a podcast listener. If you are a podcast listener, then I'm going to do something really quick. If you guys are podcast listeners, check something out for me. Twitter. Give me one moment, guys. I'm going to find you a link here. If you guys are podcast listeners, check this out. Let's drop the link for you. Click this link. If you guys are looking for my podcast that I'm on, So I don't own the podcast. I am a guest host on Market Insights podcast, and it is a collaborative podcast with two other fantastic commentators. In fact, two senior market analysts from Oanda, who is the broker that I use. They actually have Market Insights has asked me to be on their podcast as a host, and so I do that twice a week. And it's an amazing podcast. And I'm not just because I'm on it. Of course, that's partially why it's amazing. But the other reason is because, again, there's two incredible co-hosts that take on the show with me. We go over content. So again, Angeline says, I've been listening to that podcast since you mentioned it at the live event. It's a very good podcast and very informative. Thank you, Angeline, for checking out the podcast. I appreciate you actually going and doing that. So yes, it's a wonderful podcast. It's a really cool opportunity for me. And I would really, really love it if you guys listen to the podcast on a regular basis, partially because it's kind of like your bite-sized on your way to work listen that keeps you up to date with what's happening in the markets. We cover a lot of like current events and that sort of thing. Anyways, let's get back to some charts here, guys. So the Australian dollar breaks through support. I would say retests look like selling opportunities until further notice. The Australian dollar, I actually really like this on the sell side, especially around this 38.2% retracement. So this goes kind of into the area of 38.2, past level of support, possible retest, continuation play. It might be interesting to pay attention to that. So I like the Australian dollar on the short side. Again, backed by institutional outlook. And yes, very good stuff. Sorry, guys, I'm just messaging sales team to see if anybody is almost in the office. We're doing a giveaway today, but I can't do the giveaway until we have some reps in the office. What's the name of your Spotify podcast? I just dropped the link. We just dropped the link here. Click that link. It's in the chat. Just scroll up a little bit. That will take you to that. Will you upload more fundamental explained videos? Possibly in the future. Possibly in the future. Those are a lot of work, but I enjoy doing them. I just have to have some time stamped out, which seems to be of the essence these days. Anyways, let's keep going. So we have JOLTS job openings again in about an hour, which, again, if I make it an hour, that'd be incredible. No word from Ivan, I imagine. No Ivan or Tom. No word from them. We're like stuck in the desert with no water here today. Anyways, let's keep going. I want to take a look at the indices a little bit. NASDAQ 100. So I mentioned that I want to talk about some of my current positions. I am, I believe, almost out of my NASDAQ position. So NASDAQ right now is very, very close to trailing stopping me out. Okay. So in terms of this, we picked it up last week. I shared this signal inside of our Discord group. Price has just rocketed since. Until recently, we've started to see a pullback. And as we pull back here this morning, the question will be, if we break through the support level, that's going to be my cue to go ahead and cut my trade on the NASDAQ for a profit. We're currently floating around $5,800. So if it does continue lower, we'll probably close around $5,500 profit. Now, of course, at one point, this trade was up almost $8,000. So I am giving back some profit, but I am also giving this some room to potentially bounce and continue, right? If it does continue, if it takes out the highs, my goal will be to look to trail stops tighter and further into profit. But again, that is not in front of us right now. So we're kind of just waiting to see what happens with this trade. Again, this is a NASDAQ long position. I'm trading QQQ on my broker. I just trade the ETF as that's what I'm comfortable doing and what I prefer to do on my trading account, which is Webull. And I do use Webull for my index and gold trading as a US client. If you guys would like to join Webull as well, there is an option to click a link down below in the description, which will allow you to sign up and get free shares when you do create an account and deposit. The information for that will be found down below in the description if that's something you're interested in doing. So, yeah, so that's where I'm at with my NASDAQ position. I am currently just watching to see if I basically get trailed out, and we will keep tabs on that. So no Hallie this morning. Okay, got it. Julie's going to jump on the talk too. Very cool. All right. The Bitcoin giveaway is over. However, yes, we do have another giveaway, which we'll be doing in today's live stream, which in fact, let's do that right now. So if you guys have not joined the Bitcoin giveaway, this is going to be your last chance to do so. I'm sorry, not the Bitcoin giveaway. We're giving away a copy of the EDGEFINDER. I showed you guys the COT data. If you guys would like to join the giveaway for this, here's what you could do right now. We're going to drop a link in the chat. It's going to take you to a live chat feature where you can ask your questions. And that's being dropped right now. Sorry, guys. I'm off. My focus is off because I'm trying to coordinate who can help us with the. So we have a girl who's on vacation now, who usually helps us, and then also another one is out of the office today. So I'm trying to coordinate who can help us with our giveaway. Julie is stepping in. She's our superhero. So thank you to Julie for that. So yes, click this message here. Click that link. It's going to take you to a live chat. If you have not entered the giveaway, here's what you do. Click that link. It's going to take you to this link here. And click EDGEFINDER Trading Software Access. This will open up a chat with probably Julie, who is in, she's helping us out this morning. And let her know that you want to join the Bitcoin giveaway. We're going to give away one Bitcoin, I'm sorry, not Bitcoin, EDGEFINDER copy today. I'm sorry, guys. I am all over today with the live stream. It is too many things to coordinate at once. And poor Chandler and I we're battling through this long stream today. What are your thoughts on the S&P on the daily chart? Rob Summers, yeah, let's take a look at that. I talked NASDAQ. Again, I'll be trailed out if we do keep going lower on my NAS position, but the S&P, I don't have any trades open. So here's one thing that is a little bit concerning with the S&P. We gapped open this week, and we came back and closed that gap and kept going. So I'm kind of not loving the price action here. Again, this popped open on debt ceiling concerns kind of being washed away. Right? Debt ceiling concerns went away as there seemed to be some resolution there between McCarthy and Joe Biden, where they were like, okay, we've come to a resolution that, satisfies, is a compromise to a degree. And the market likes that, right? The market's like, okay, cool. So that fear is kind of ruled out of the market. So we've seen prices come back on the S&P though, and not hold those gains that they made. And so the S&P has been really, really on a strong tear, not nearly as much as the NASDAQ, right? So if you look at NASDAQ's been on much more of a tear. And, it probably is due time for some of these indices to have a bit of a pullback, right? Now, am I shorting it? No, I'm not looking to short this, right? This is if you go by the classic definition of a 200 moving average being kind of our bull or bear trend. Let me show you guys this really quick. I'm going to just show you a longer term trend. So we're going to go 50 and 200 on this. And this is going to show you long-term bull and bear trends. Okay. So we've got the A1 momentum indicator at the 50 and the 200 on the long term, right? We've been trending up, trending, but then we flipped in 2022. We had a classic bear market, right, which has been selling off. But more recently, we flipped back into the camp of a bull market, right? It's weird to see it. We went so far down, right? We sold off so much, but have been seeing on the higher time frames some consistent overall increases to the upside. So we've been talking a lot about the indices recently, and Chandler, let's do this. Instead of doing the talk to, we are going to, of course, announce a winner for the Bitcoin giveaway. I do want to also say, guys, we are sort of short-staffed this morning. Some of you guys have been asking for trials. If you guys would like a trial, instead of using the talk to link, let's see if we can drop just the free trial link, Chandler, the one that takes them to a form to fill out. If you guys would like trials on the EDGEFINDER, we're going to drop that link in the chat. Some of you guys have been waiting for this. We have the ability to give out some trials today. If you guys would like trials, instead of the talk to message, Chandler, let's do the, there it is. Perfect. Awesome. So yes, this link right here, guys, if you guys are wanting to try out the EDGEFINDER, some of you guys may want to check it out for yourself. Click this link. It's going to take you to a place where you can quickly observe the EDGEFINDER for yourself, try it out for yourself, check out the smart money tracker, retail sentiment. You just fill out that form, and you'll be in our queue to give you a trial of the EDGEFINDER. So there you go. All right, so let's keep going. The S&P 500, again, giving back some gains here today, and actually pretty substantial slip here to the downside. Now the 1 hour chart showing some weakness. If you guys are watching this one as well as the NAS, again, if the NASDAQ keeps going lower, which it does look like it's wanting to do, I will be out of my position that I've been in here on the channel for the last few days, since last week, really. If this price breaks through support, that's going to be my cue to get trailed out. So again, I entered back in this area, this area here. I've risked it all the way up, but if it breaks support here today, I'll be out of my NASDAQ position for a profit. Okay. So we are keeping tabs on this one here this morning. I missed the NASDAQ trade. Yeah, the NASDAQ trade has just been, for me, it's been probably, in terms of the single most P&L impacting trade so far this year. I think NASDAQ, it may be contesting with some of the other ones, but we're very close. Frank will be joining soon. Okay, awesome. Cool. Frank's going to come take over the stream with me for a little bit, which would be a nice relief. Again, we got JOLTS numbers here in about 50 minutes. We're going to try and make it the whole way. If you guys are supporting us here on the stream, help us out. We're doing a marathon stream here today. We've done a news event. We started an hour ago. We're going to be doing another hour here. Hit the thumbs up button. Help us out, guys. Smash the thumbs up button. Take 2 seconds. Again, we're going to stay live here for over an hour and a half, almost 2 hours on air. And afterwards, I will probably collapse. But it's going to be worth it. We're going to have some fun. We're going to cover some news. We're going to talk about some trade setups. And someone asked me to do silver. So here's where I'm at with silver. Okay. A couple things I want to talk about. I sold puts on silver. And this is one that I actually shared inside the group. I didn't share my options trade because I'm very new to options. So when I share trade alerts, I don't like to share trade alerts unless I'm very, very comfortable in what I'm trading and sharing it with the group. So I do actually have a silver position here. So I have a Bitcoin position I'm holding on to and a silver position that I've shared inside of our Discord group. By the way, while I'm talking about our Discord group, let me not forget, you guys can join our free Discord. We're going to drop a link to the free Discord here. It's a link to join the free version of our Discord channel. If you'd like to do that today, click the link that's being dropped in the chat right now. Fill out that form, and it will send you a link. You can join right away to the Discord channel where you can get some free analysis each day. We have videos that come out. There's plenty of free value in our free Discord channel. It is genuinely free. So just click this link here, fill out your name. Again, we do this process so that we don't just get a bunch of spammers joining the group. If you're serious, if you'd like to join our free Discord, click this link, fill out your email, put your real stuff in there, because if you don't, then you are not going to be able to join. And then there you go. You'll be in the free Discord. So yeah, so let me give you guys a little bit of an update on the Nick, how's your Euro Yen trade? I'll get to that in just a second. I'm no longer in it. I'm already out. I took profits on Euro Yen, shared that inside of the group. If you're Jonathan, if you are in the group, you should have gotten the alert that I was all out of my Euro Yen trade. Anyways, silver, I'm in a long position here. but then I also sold puts down at $20 a share. Now, silver SLV tracks the silver market. Of course, the silver market has been in a recent decline. I picked up some silver over around here and has traded kind of sideways since, but I've sold puts. I sold 3 contracts, which I'm very new to options. Admittedly, I know my way around them. I know generally how they work, but I don't trade them very actively. Until recently, I've been learning a little bit. I basically sold 3 contracts of silver, which earned me $78 in premium immediately. So as soon as I sold this put, I earned $78 into my account, which I know is not a lot of money, but I earned $78. All I did was I wrote an option, or I sold an option, sold a put. So what this says is that if the market at any point before expiration date, which is June 30th, trades underneath $20 per share, I am obligated to buy shares at 300 shares at $20 per share. Okay, so this is, I know, not really what this channel is all about. Options trading is something that, is new to me and I'm learning about, but I'll, of course, share a little bit of that journey with you guys as we go. We've got Frank in the room. Let me bring Frank in here. Maybe you can go over some charts with us here as well. Hey, Frank, what's going on?
Hey, what's up?
Hey, so thanks for joining. You're like my savior right now, because I think we're going to stream here for almost 2 hours today, so I might die. But with your help, maybe I'll die a little later. So what's going on, Frank? Yeah, I'll last a little bit longer because you're here. Guys, Frank is he's one of our analysts and traders here at A1 Trading. Again, when you guys see the EDGEFINDER and stuff, Frank behind the scenes is helping to design some cool stuff, which, Frank, we have some PPI stuff we could go over together today. We've been working on some PPI data, and it is in the EDGEFINDER. So maybe we could do some PPI analysis if you have the EDGEFINDER pulled up. If you want to show us that new feature, that'd be awesome.
Yes, let me pull that up.
Okay.
I just have the charts up for now.
Gotcha. While you do that, I'll pull up, we talked silver. I want to come back to gold for a moment, see what's going on with price action here this morning. Again, gold on the lower time frames. A lot of day traders, I've been seeing it all over my Twitter feed. A lot of day traders are very long on gold. And, the gold market, I think, does have room to go higher in the short term. But I've been pretty cautionary to people who are watching this. You have to be aware of the higher time frames. As this 15-minute chart does look good, be careful as you come into some higher time frame levels of resistance. You've got, I think you have possibly some room to see a move up to, 1968, and possibly, if bulls really get going, 1980. But I would caution traders as we do, and I'd love to get Frank's thoughts on this too. Interest rates are now forecasted to go higher than expected. And this has put a lot of pressure on the gold market. So I would say personally, even though I would love to be a gold bull, I'm kind of not really thinking we have that much room higher if we trade up to the 1980 due to higher than expected interest rate forecasts now pricing into the market. Frank, what do you think about all that? So now I think we're thinking 60% chance that in the June 14th meeting, we see another rate hike. What's your take on that in relation to gold?
Yeah, so sentiment obviously changed pretty quickly. I'm not really sure what the overall, decision will be. The odds increased, but the jump from last week to this week was pretty big in probability. So I'm not sure where it's going to go. But I still have a bullish bias towards gold just because of this this long-term trend line. It kind of bounced off. Then the fact that we're nearing the end of interest rates, obviously a hike wouldn't be good news for gold, but we're kind of towards the end anyways. And we've talked about this before, just whether they pause or do one more hike, it's kind of the end for interest rates for a while at least. Is what it looks like. So I'm still kind of bullish on gold. And this looks kind of like an area where investors don't want to touch it, which is also kind of an incentive for me to start looking, just because, at least an attempt here on the 1 day chart where it's hitting this pivotal level, it's not that much downside compared to the upside. So if you wanted to risk, just the lows below that one daily candle or the trend line, versus like, okay, I'm risking that to look at like another test at the highs of 2060, 2070. So to me, it looks like a good trade right now, but could also break under if we see that, if NFP comes out tomorrow, or not tomorrow, Friday, and is just, blows it out of the water, then we're going to have to worry about another rate hike for sure. So I think today's going to be pretty volatile, or this week will be very volatile for gold. It's just a matter of what economic news is coming out.
Yeah, no, and a lot of good points there, because again, to your point, even if they do rate hike, I generally lean in the same direction as you when it comes to we've got to be somewhere near the end of the rate hiking cycle. We do see inflation cooling, though recently it's been sticky. Last week we had PCE numbers that came out stronger than expected. Speaking of inflationary stuff, Frank, you're pulling it up here on the inflation chart. We do now have, this is something, a new addition to the EDGEFINDER, and a little bit of context. We're a software company in Atlanta. We are trying our best to build the best platform out there for traders who want to incorporate fundamentals and technicals into their trading. We've recently added the PPI numbers, which are the producer price index numbers that show inflation, but not necessarily on the consumer side, but rather on the producer's side. This is, of course, up the chain. If you're thinking about a supply chain where, you guys walk to the store, you get your toothpaste. Well, behind that is a whole industry of, manufacturing and transportation and railroads and, manufacturing. There's so many different levels to it. So a producer price index can be a nice way to look up the chain as to how prices are changing. And Frank, you've got it pulled up here. What's our latest on the PPI numbers here?
Yeah, so I just pulled up the three for now. I wanted to look at dollar, Kiwi, and yen. So what I like to see, or what I'm liking right now, is that kind of peak and the turnaround in both CPI, consumer and producer prices. So promising stuff. I don't really know about the yen, to be honest, because of their dovish statements probably like a month ago now, where they were talking about, okay, we're going to focus on the yen, or on the economy rather than the yen. So what we see there is kind of a divergence in direction between dollar, Kiwi, and yen, because CPIs clearly going to the upside, whereas other countries are more hawkish. So what you would want to look for in this chart, at least if you're trying to interpret it, is if you're trying to trade a hawkish or dovish sentiment, regardless, you want to look at the direction of the chart, because this not only gives you historical data but also projects it. So we have US dollar kind of
real
peaking.
quick, Frank, if you don't mind just jumping out of the presenter mode. I think it's, at least on the end user, it's very small text. If you could just go out of that for a second, just so we can see what you're talking to. Some of those texts, I think I got to, after the stream, change the font size to them anyways. But yeah, there you go. So you've got the two different charts here. Sorry to cut you off. Keep going.
No, so actually, this one is not projecting, but we are working on it. So hang tight on that.
Yep.
We have, so all I was trying to say is the yen's going up, dollar's coming down, Kiwi's kind of plateauing. Just something to look at. You want to look at the direction of the chart, and eventually we're going to have projections, so like forecasts, like 4 quarters in advance. We're working on not a smart bank tracker, a central bank tracker. So we have this Fed one, but we're going to kind of, add to it and turn it into a central bank tracker, so you can track the inflation rates and the interest rates for the next year or so, which is going to be pretty cool because you'll have historical and forecasts, and then we get to kind of measure a hawkish or dovish environment for any currency. So that's something I'm pretty excited about. Me and Nick have been working on that for a while.
Yeah, and I think
Sorry, I went
Frank,
off on a tangent there.
No, you're good. I think what you're pointing out in terms of the PPI numbers here, you've got the New Zealand dollar, the US dollar, and the Japanese yen. And what we're seeing in those areas is that we're seeing inflation cooling, right? We're seeing a decline in inflation in those areas. And it is, of course, putting pressure on things like the dollar, but not recently, right? We've seen some dollar strength as some economic numbers have shown some resiliency. I think that the dollar uptrend here, and I've said this for a little while, I think it's kind of short-lived. Like I don't necessarily think it's a new bull market and we're going back to the 115s or anything like that. I think that it's short-lived. We had the debt ceiling concerns. We also have had some forecasts for further rate hikes. It'll be very interesting as we get closer to that June 14th meeting, especially with NFP jobs this Friday, to see where we go to in terms of forecasts after that, right? Because again, if jobs numbers, to your point that you made earlier, if jobs numbers come out very, very strong, it's going to look like more rate hikes are coming. Whereas if you get jobs numbers this week that are slowing or less impressive, it is possible that pendulum could swing back. So instead of 60% chance of a rate hike, we see that kind of fall apart into more of a okay, they're probably going to pause. And so we've seen that story flip-flop over and over, back and forth. But it's been an interesting one to watch in terms of the dollar, which has continued to trade higher. I think the dollar may have short-term a little bit more room to the upside, perhaps a move up to that 105 daily resistance that we marked on our charts. But that's kind of where I'm at with it. You mentioned longer term, gold has some support. Clearly, this level here recently around 1936 has been a pretty strong area for bulls. And you mentioned this longer term trend line to the upside that you've got drawn on your chart. That seems to be getting hit as well. So it's certainly at a decision point. Gold has got to either make sort of a breaking point back to the upside, or it's got to break lower underneath the lows. Again, I am long silver in the metals market, of course. Frank, I don't know if you caught that update that I've got on my silver position. I've sold puts on silver, and I have a silver position on as well within the Discord group. So in terms of silver, in terms of gold, I am longer term bullish, hence why I have a position on. I just don't know if we're at the bottom right now. And again, I think it's a hard call right ahead of NFP numbers to try and make that decision. What do you think about, so we talked gold here. What else are you looking at on the currency side? Are you looking at yen pairs or dollar right now? What are you looking at, Frank?
Yes and no. I got stopped out of dollar yen.
Okay.
Once the bond yields turn back. But I am in Euro Kiwi. I'm still trailing that. I just like these channel moves. A lot of the pairs that I've been looking at have been in this sort of channel, and they're good at completing the moves. So I'm pretty confident in this one. I'm trying to take Euro Kiwi to the top, which is probably like 1.8 something. So got in a pretty good position around this green bar, just trailing and hoping to see some upside. So I'm pretty bullish Euro, even though smart money kind of scaled out. They're still the strongest on the COT side, whereas Kiwi's somewhere in the middle, but it's also very, very dovish like the yen, where the governor, or is that his name? Or he said something
Yep.
about discontinuing the rate hikes and and just keeping it as is. I think Kiwi's the highest. They get the highest yield out of like all these major currencies, so they're gonna hang there for a while and then probably cut, just like the U.S. like next year or something. So currency strength kind of declining, looking more dovish overall.
Yep. And speaking of your Euro Kiwi trade, guys, inside of the Discord group, I mentioned it earlier. We do have a Discord. We have a premium and a free version available. So Frank mentioned he's been trading Euro Kiwi. You can see all of the trades that Frank and I are taking. Of course, we're not here. We're not, copy machines. We're not here to tell you what to do and promise you the world or anything like that. We are genuinely trading out here. We are learning and improving ourselves, as all traders do. You never know everything, right? So we're out here doing our very best, but we're also just sharing what we are genuinely trading ourselves. If you guys would like to join our Discord, two options for you. We have a free version available where you can check out some of the cool stuff. But then, of course, we have the VIP reserved for people who want to see the trade alerts, join the coaching webinars. But if you'd like to just at least get started, try the free one here. It just got dropped in the chat. If you click this link here and fill out that form, it will direct you to the free Discord channel. It'll send you a link. You'll be able to get in right away. It'll take you 2 minutes to get into the Discord, and you can see some of the analysis that's being shared by Frank and myself. And then, of course, if you do choose to sign up for the VIP group, that's where you can see trades that are being taken. So I've been trading things like NASDAQ to the long side. I've been trading silver, Euro Yen. I got stopped out for a profit, and Frank is in that Euro Kiwi trade currently. So, and yeah, to your point there, Frank, about the Kiwi specifically, it has kind of shifted in terms of, and I'm very excited for us on that central bank tracker to see, what we talked about there, right? Like we have the Kiwi specifically kind of forecasting now to not rate hike any further. I'm excited for in the future, once we have that central bank tracker, to see those sorts of things reflecting in our central bank tracker. So I'm really excited for that, because again, you mentioned also that the Bank of Japan is quite dovish as well. It's a very nice, a very, very interesting thing, that the differences in particular currencies. I think that the also on the watch list, I believe NZD/USD is also a strong sell right now, specifically against the dollar. But I think we're both kind of the same. I'm just not really super bullish on the dollar. If there's something that's screaming opportunity, I might nibble a little bit, but I just have things that I'm more interested in on the trading side. I would like to double back and
I will say that.
Yeah, go for it.
About the dollar. Sorry, I don't mean to cut you off, but
No, you're good.
about the dollar. Pulling up DXY. So you said limited upside. I don't really know what your target area was, but we just saw a break above the trend line, which is kind of opposite gold. If we saw a break below the trend line on gold, it would have been the exact same move, but they both hit that trend line at the same time. And the dollar actually broke above and closed above actually has not closed above. Today might be the day where it does. And if it does, that could indicate more upside. What I was looking at was around 105 somewhere. So if you were bullish dollar, like I can kind of understand more towards like the short term, but longer term, I'm not really sure, because we've kind of hit, I think, our peak in terms of like the hawkish sentiment. So I'm more so looking at, maybe a technical move to the 105.8s, but other than that, I'm not really sure. I'm just kind of on the sidelines for the dollar, I'd say. But again, I took the dollar yen trade, which is, I guess, kind of contradicting what I said, but dollar yen is more so looking at bond yields, so that's a different story. But the problem,
Yeah, it's a little bit of a bond yield play rather than a pure dollar trade. So yeah, I definitely I was going to ask you next about indices. So you've got the NASDAQ pulled up. Look at that NASDAQ chart, man. That thing has broken outside of the upper limits. So when a chart trades like this, Frank, when you're looking at NASDAQ and it breaks the upper limits of a channel you've got drawn. What are your thoughts? Are you extra cautious? Are you thinking a bigger move to the upside? What's your take when it breaks out like that to the upside?
I am extra cautious now. If it was 2020, I'd just be buying. But yeah, but the problem is every time we see a higher high, it turns into something like a major pullback or a lower low. That's mostly on the S&P, but it's hard to tell. But if you zoom in on the hourly or the 4 hour, these charts are making like these wave patterns, but slowly increasing and like I don't know. I don't know the mathematical term for it, but it looks like a megaphone almost. So you sort of shape. So the swings
Yep.
get wider and wider, and then there's a decision where direction makes its choice, and then it just does it all over again. You can see like these lower lows, and then all of a sudden break to a higher high. Very predictable just because of the environment we're in. But what I'm looking at is, this has been in an uptrend since, I guess, October, November of last year. So I could keep saying, oh, it's going to come back, but you know how resilient the market is. So I'm cautious up here. I can see a pullback, and I can see it hitting support, but I thought it had limited upside, but it broke above that channel. So the problem is you don't want to buy at the highs. So
Right.
I'm kind of staying away from indices, but if you're in it, like there's no reason not to ride out your play and maybe just trail it. I'm not in any indices right now, but I'm in some tech stocks, so I'm not really touching it. I'm just kind of seeing where it goes and scaling in or out depending on the direction.
Sense. And I want to add, in terms of NASDAQ, you made some good points there about, especially, when you're looking at something like that daily chart, right? You had something to this degree drawn where you have this upward channel, right? That's going, and this is where, channels could be tricky because you have this upward channel, and let me see if I can just get this drawn so we can see it. So you have this upward channel drawn and prices, bumping up against these levels. And each time it does, it sees some give back. Until recently, we had what I say is sort of an extremely rare event on the NASDAQ or any indice for that matter, whether you're trading the Nikkei, whether you're trading the SPY, whether you're trading the Dow. Indices do move up and to the right over very long term, but it is very rare for them to jump like crazy like this outside. I agree with everything you say, Frank, because what I've done personally is, as we've broken out of that channel, essentially seen an explosive move like that. The way I've managed my trade here is I've basically been taking every opportunity I can to essentially trail my stop pretty tight. Because again, I do think that, when you get these very, very emotional charged movements, in indices, they usually do not last. And, I think that, it's a game of musical chairs, right? When you get these massive runs on the tech stocks, especially, we know that, yeah, sure, the NASDAQ could just continue to scream higher, which is why I'm trying to trail a stop. But we also know that it could just be this emotionally charged risk on move off of the AI craze, but perhaps one slight move from the Fed that, promises further rate hikes, and this thing comes crashing down really, really quick, as we saw 2022 crush stocks, especially tech-related stocks. So, I'm floating a profit here, but to your point, the words extra caution, you use those when you're talking about extreme jumps above a channel to the upside. It shows abnormal move. And so what I've done is I've basically taken the opportunity to trail my stop extra tight here. If price breaks down here today, if we break through even this minor level of support, I'm just going to close out and I'm going to look to reset. You mentioned that sometimes with indices, especially, you get these big moves and sometimes just wait and you miss out on the move. But I think it's better to miss out on a move than to chase and get burned, right? Because if you bought it, if you bought the highs here and it does in fact dip real hard, we do get that dip. If you're patient and you're able to get that pullback, you're going to be really happy that you did. But if you bought up here chasing and it dips on you and it just keeps going, you're going to be in a lot of like max pain. So I think that it is discipline. It is, that's the stuff that keeps you, from losing your shirt in this stuff. And I think trailing a stop is a lot of work. Jason, thank you for the support. My man is still live. That's motivation right there. Yeah. Frank, go ahead. Sorry about that.
I was just going to say, it's also really concerning that the rest of the market isn't doing that. It's just the major tech ones. So
Yes.
you got Tesla, Meta, Shopify, whatever. Those are the only ones that are like actually doing anything. So if you were to pull up the S&P right now, in fact, the market just opened 5 minutes ago. So I have this thing drawn, which is what I was trying to talk about earlier, was the megaphone pattern almost, where you have higher highs followed by lower lows, and people, getting in at these breakouts, if you want to call them that, and then realizing, oh, now it's than where I expected it to be. It probably hit my SL anyways because it's lower than a low. But what that has been indicating for the past like 2 months is, okay, we hit a lower level. That means it's going back up. So definitely a trader's market here. Right now, I would not buy the S&P because give it a couple days and you might see it coming down, maybe even below the 4,000s. But, just something to look out for. The rest of the market isn't doing what tech is doing. So could be false alarm for many investors who think the market's turning around, whereas the dollar's getting a little stronger today and the S&P is kind of waving back and forth. So not a clear bull market yet.
I think you made some excellent points there in terms of specifically, Frank, the NASDAQ right now. If you cross-examine the NASDAQ, and in fact, this is a cool study you can actually do. So if I go, let's do this, NAS100, and we cross it with US 30, right? So many call this chart that we're looking at growth versus value, because what we've just done is we've just crossed the NASDAQ against the Dow Jones. Now, the Dow Jones is what we would call value stocks. This is your Coca-Colas, your Boeings, your super safe stocks, right? NASDAQ is your growth stocks. It's a 100, all different size companies, but mostly focused on tech. So we call this the growth index. In 2022, this thing got absolutely destroyed, right? Here is 2021 where things peaked and then it just got decimated, meaning people went heavy into value instead of growth. They sold growth, they bought value during this time. Now we see a flip side scenario where people are now going out of value and into growth, right? They're picking the NASDAQ. But to Frank's point, what is pulling this NASDAQ up is not a wide arrangement of companies doing great in the markets. What's dragging this thing higher is a few big names doing exceptionally well. Here's one that we could all probably recognize. It's Microsoft. Microsoft has exploded this year. Massive, massive earnings growth. It's done quite well. All the right things from Microsoft. But the average stock, the average company in the United States is not doing exceptionally well, and globally is not doing exceptionally well. It's just that some of the really big ones are pulling the whole market. So to Frank's point, caution is so important here because this is not a wide, successful stock market. This is a couple stocks making the whole thing look good. So we have to be very careful with that. I think it's worth, noting that divergence. And even to your point about the megaphone concept, Frank, I mean, that's kind of what we're seeing in terms of just the divergence and big swings on the NASDAQ and the companies that associate, the big winners versus the small average stocks. So yeah, it's It is quite an interesting time in that, and I think that being cautious is incredibly important. We've got here, guys. We've got still 20 minutes to go until the JOLTS job numbers come out. We do have Tom who's going to join us, which I think is awesome. We'll get some more commentary from Tom. You guys saw Tom yesterday on the stream. He came on and we talked a little Aussie dollar. So we'll bring Tom in and say hello to Tom. What's going on, Tom?
Hi, Nick. How are you? Hello, Frank.
Hey,
Hello, Tom.
Long time no see.
Yeah, twice in 2 days, people will start talking, Nick, about us. You know,
They're going to start wondering if this is still my channel or if it's just if it's everyone's channel. Is this just no? But Tom, Aussie dollar selling off today. Are you still in your trade?
I am. Yeah, I've closed a bit of profit on Aussie dollar, US dollar. But if we take a look at it, yeah, I've taken a bit of profit. Yeah, around 6475. But if we look at the day chart, I'd still be happy to get back into this. My higher time frame target is still all the way down to this 6450 level. So yeah, if we get a retrace back into this grey zone again, I've taken a bit of profit off, but I'll be happy to re-enter this trade, and take it back down to those higher time frame targets. But yeah, well, it depends a bit on how the daily candle finishes today as well, because it might want to push, and have more of a retrace. But I'll see. But yeah, still interested in Aussie dollar, US dollar shorts, and yeah, Euro, New Zealand. I was interested in today as well. But yeah, that's my view on Aussie dollar, US dollar.
Tell us about New Zealand, Frank. That's the one trading. We might have lost Frank. I think.
Yeah,
oh, there he is.
The connection's really slow. But what'd you say?
We were talking about Euro New Zealand. That is the trade that you were looking at too, right?
Right. Yeah. Still in that. Still trailing. Looking for. I guess just reiterating. Just looking at a completion to the upside. Hopefully to hit the top of that channel. Around the 1.8, 1.81s, somewhere around there. But very dovish Kiwi right now. Euro's the most bought in terms of smart money, so just kind of seeing where it'll go.
And Tom, yesterday you spoke to us about the euro against the Australian dollar. Is that right? Are you still in that trade?
I took profit again on the highs. I got in Euro New Zealand earlier today, but you can see I hit my profit target at this level here.
Nice.
Because yeah, if you see on the day chart, that was literally back at those daily highs. So price came back up. We got this lovely value entry down here. Oh, and then I'm also in gold, and then price came back up and hit this daily high. So yeah, what I do, guys, is I take some profit. So at this level, I'll close around 80%, and then my next target is up to here, and I'll let 20% run. But also re-enter the trade as as price kind of comes up to this area as well. So yeah, Euro Australian dollar was a nice trade, and currently in Euro New Zealand dollar, trying to take it back to these highs. Let's have a look at Euro New Zealand. Yeah, just trying to take it back to these H4 highs to start with. Again, I'll take some profit and then let the rest run up to this higher time frame target up here. But the only thing about this was that really poor CPI data coming out of Germany earlier, which is, we'll see how that reacts. But, it's having a bit of a negative reaction now. But yeah, we'll see. But Euro New Zealand longs as well.
Yeah, and Tom, yesterday we spoke about something for people who may have missed that component. When we're talking about this euro against the Australian dollar, which Tom sounds like you're having an exceptional trading week, which is awesome.
Yeah,
He's trading.
right.
Yeah, he's Aussie dollar, he's trading euro, Aussie. One thing that we noted yesterday, and I think it's really cool to follow up on this, is we talked about the commitment of traders data in regards to the Australian dollar and the euro specifically. So Tom and I were talking about this yesterday. He bought a retest, a beautiful price action pullback, but he mentioned that it kind of aligned nicely with what the commitment of traders data was showing him as well. Specifically, that in terms of where institutions are positioned, we're talking hedge funds, small bank, large speculators, right? People with professional money making decisions are very much overall, on average, they're long euros and they're short Australian dollars. Okay. And so knowing that information when you're looking at a chart is really important, because if you're looking at something that is trending well, but it doesn't have that COT data to kind of back it, it may be something where you want to be like, let me be cautious here, because again, institutional money might agree or disagree. But in this case, the wind was in his sail, right? The euro long, the Australian short was kind of the COT, or the commitment of traders data positioning, which of course we can track in this. We have not just the euro and the Aussie, but all currencies as well as several commodities. We recently added Bitcoin. We've got indices in there as well. And guys, we have been dropping out free trials here today. All you have to do for a free trial is fill out the form that we dropped earlier. Let's drop that one more time, if you don't mind, Chandler. Chandler is our superhero today, coordinating. We got Tom in here. We got Frank in here. We've been live for an hour and a half already. So it's a hectic day, and Chandler is we're really making them work today. So thank you, Chandler, for that. And there it is, guys. Click that link if you guys would like a free trial of the software. You can check out our COT data, retail sentiment. And again, all of that is a free trial. So you can check it out for yourself, see if it's a tool that would be helpful to you. So love the points about Euro Aussie. And it seems like you got a nice point to take some profits here, Tom, as it is retreating just off this 1.65 mark. That's quite the Australian dollar trades that you've got on right now.
Yeah, definitely. And this Euro New Zealand trade gave us such a beautiful setup earlier. You know, again, just one of those what was once resistance. So this is the H1 on the Euro New Zealand. This is exactly my entry. And what was, price came up, it was hitting this level. This becomes resistance. And when price breaks this level, comes back and retests this level, like I said yesterday, guys, this is my bread and butter. What was once resistance becomes support. And then we just look to take it back to, the last highs initially, where I close some profit, and then I'll leave some profit to run for 12 years, maybe. But yeah, those trades are just what I'm looking for. And I try to, look at the H1, and long as it makes sense on the H4 as well. And, pretty much as I woke up, we had this H4 candle, which, is just telling me buyers are in control and we, want to carry on up. And a little while ago, we just had this H4 candle finish as well. So, still confident buyers are in control. But yeah, that CPI, German CPI, is still in the back of the mind, about the euro, but still looking good, this trade.
Yeah, it's cool to see you and Frank kind of on the same wavelength with that Euro New Zealand trade. Even though you guys hadn't talked this week yet, you're both kind of on that long side of the trade, which is really cool. I want to just shift our focus a little bit. We are about 12 minutes out. Of course, this is why we're gathered here today. The big event is on the horizon. We've got JOLTS job openings coming out in just over 10 minutes, which of course will give us insights as to the number of job openings here in the United States, which of course, with us being one of the drivers of the world economy, a lot of focus will go into those job numbers coming up. Frank, give us a little bit of sort of just a game plan. What should we be looking out for in terms of job openings here today? How could this impact the markets, and what specific charts are going to be impacted by job openings as we get started today?
Right. So NAS is going to be pretty good for the dollar. So they're going to probably, the Fed at least is going to be looking towards another June rate hike. The JOLTS jobs and then NFP Friday are going to be pretty big on what investors will think interest rates will go.
Yeah, and it in terms of which charts specifically, of course, you've got the dollar, but what does it have in terms of impact on gold and indices, especially? Because I guess a lot of newer traders in the audience may be wondering, will this impact my gold trade? Will it impact my NAS trade? How could the JOLTS job openings potentially impact those things specifically?
So a beat in expectations is going to be bad or bearish for indices, good for the dollar. So I guess if you're trading Euro USD or Pound USD, you're gonna, and if you're a bull on either of those pairs, you're gonna want to look for a beat in JOLTS and then a beat in NFP, or just a meet at the expected forecast. Gold, on the other hand, I have that pulled up. It's already kind of, I guess, sentiment is gearing towards maybe a miss in the data. That higher rate, not but you see it touch higher before was a big rejection. So maybe gold is trying to turn to the upside here and expecting a miss in that jobs data.
Yep, and sounds like you cut out there for just a moment, but it seems like you're back now, Frank. I think, gold, like you mentioned, it's flying high here this morning, and like you just said, maybe expectations here are now a little bit, that job openings could be slow this month, and that perhaps that could lend some upside for gold. Again, why that would be the case would, of course, be that the Fed, if it sees slowing jobs numbers, is more likely to pause on rate hikes, right? Because too many rate hikes can be really devastating to the economy. But if the economy is really strong, meaning jobs are red hot, they might not worry too much about moving rates. So we're watching this jobs number today. It is why it is a red folder. As a newer trader, I remember just seeing, oh, it's a red folder, it's going to do something. But now later on in our trading, careers, we understand really in more detail why those things actually really move the markets, right? JOLTS numbers, the jobs numbers are going to show us what the appetite for hiring is here in the United States. So it will be very impactful. Again, I think in terms of gold right now, in the shorter term, Frank points out on the higher time frame, we got a longer term trend line. I've been watching very closely to see how this price reacts around 1980. So I've got my chart pulled up here, and I'll show you this. On the chart, 1980 has been a stubborn level of resistance for sellers. We're looking at this, we're seeing 1980 continuously shows selling pressure, right? So as we trade higher, be cautious as we approach this 1980, because we could come right back up into this and yet again see sellers take back control of this market. However, Frank points out that on the daily chart, we're hitting a longer term trend line and we're seeing some reaction to it already. If you're watching this from a bullish perspective, the most bullish thing I think that could happen today would be an explosion to the upside on gold beyond that 1980 mark, and now capture that area and perhaps establish a new higher low in that area. So we'll have to watch to see. Again, it's going to come down to the numbers, which we have coming out in about 7 minutes. Tom, you mentioned, do you have a trade on gold? Do you want to talk about gold for a second?
Yeah, sure. I'm in a gold trade, again, taking a bit of profit off of this trade. So, yeah, pretty much the same areas you had mapped out, guys. This longer time upward channel, this area of support, this channel as well, makes this a really good area of support. If we zoom in, we also had this, really nice bullish candle bounce off of this level. It's dwarfed this candle, even this candle. Okay, so a real bullish push off that zone. And then basically, guys, what I'm looking for is kind of a H1 structure build up. And, you know, and that's what we got. So when price came back to around here, I started entering buys, you know, with a view to a stop down here. And yeah, and then looking to take it higher. And, you know, totally agree with your target there. That H4 level, which I've got marked in here, is my target. Okay, so yeah, this level here, like you pointed out, Nick, has proven a good level of resistance. So we'll see what price does after these job lot openings and how price reacts around this level. Again, I'd probably take some profit here because I don't want to, if I'm buying the market, I don't want to fight sellers. Yeah, I just don't want to fight them. So when price gets here, take some profit, you know, usually around 80%. You know, and then if it does come back down, I can still enter more into the trade. And if it has another attempt at this level, then, you know, we can still, you know, see if it breaks it. But that's how I'm trading it today. And that's what I'm looking at. But yeah, this level, we get a break of this, like you say, you know.
It's cool to see us kind of on the same page there.
Guys.
Yep, go for it, Frank.
Sorry, it's so delayed. But my question is, what if we see a beat in jobs openings and we see a miss in NFP? What do you guys think of? So we have a large amount of open positions in the market, but we see a miss in the number of jobs added.
So if we see a large amount of job openings, but then we have, well, so let's go look at the definition here for a moment. Minutes out, guys. Also, we will be doing, for those of you guys who have been waiting on the EDGEFINDER giveaway, that is coming right after the announcement of job openings will come back. So don't go anywhere. And I'm going to tell you about how, if you haven't joined the giveaway already, we'll drop some information in the chat real quick. If you guys have not joined, we're giving away an EDGEFINDER copy. Click the link that's being dropped in the chat right now. Message us that you want to join the EDGEFINDER giveaway. Do that right now if you have not already. It's the last chance to do it. We're going to be announcing the giveaway winner after the stream announcement. So join that if you have not already while I go over this really quick. Click that link, chat us right now, join the giveaway if you have not already. We're announcing that after the JOLTS job opening. So to answer your question, Frank, first of all, we need to understand number of job openings during the reported month, excluding the farming industry. So if we see a big job openings, a demand for job openings, that would, of course, be bullish for the dollar because people would say, oh, well, the economy is clearly strong. But then to your point, if we see non-farm unemployment change, jobs getting filled much less, it'd be a little bit confusing, to be completely honest. I feel like it'd be kind of conflicting, right? Because job appetite by hirers, right? Employers are the ones who open up the jobs. If their appetite's high, but then they're, you know, not a lot of jobs are actually getting filled, I would just be genuinely confused, to be completely honest. But it's a good question, to be honest.
Yeah, like what carries more weight?
I think probably probably the decision to actually, you know, hire someone, the NFP probably does. Just because, again, that means that, you know, papers were signed, somebody's filling the seat, they're now manning their post at the job. I think that's probably more impactful. But still, job openings show the appetite for hiring as well. So they're both very important numbers. So, guys,
overall,
also we have
since February.
Go ahead, Frank.
My goodness, this stream must be like 5 seconds delayed. But since February, the number of job openings, regardless of beat or miss expectations, have been diminishing. So the past however many months since February, 3 months, the number of job openings. Is that really a good sign or a bad sign for the market? And does it solely depend on that data, or is it also, you know, more so about NFP that comes out every month too?
Yeah, exactly. I mean, It's just several. They're both very key, important numbers. I want to also just make sure I don't miss out on the actual release number, guys. We are coming close to the release here. We've got. I'm pulling up charts just so we can keep an eye on everything. I'm going to put the S&P 500 in the bottom left. We've got gold in the top left, and this is just on a 15-minute chart, so we can watch the reaction to the news. Our second news event here for the stream. Let's go breaking news right now. All right, here we go. Let's see if we get any reaction to JOLTS numbers. S&P immediately selling off. Euro dollar selling off. Dollar strength coming in dramatically here. Gold also rejecting just off that 1970 mark. And we're just watching the reaction here. Dollar strength showing its teeth right now. Let's see what we got in terms of JOLTS numbers. Job openings hotter than expected at 10 point, back above the 10 million mark. Forecasts were only 9.41 million, and yet JOLTS job openings came in at 10.1 million. So showing higher than expected job openings here in the United States. That is quite the number here. We've got gold selling off from its 1973.7 high. We've got the S&P selling off as well, as this is probably driving some fear that, again, rates may be due to go higher. Dollar strength, 104.48 here, trading off the lows. Frank, what's this doing to the market right now? What are you looking at?
So kind of feeling bad about my dollar yen trade. I wish I had stayed in, but it hit my SL, so got to stick to my strategy. But dollar takes off because of this. It's also an initial reaction, so I'm not really sure what later on. But I like dollar yen still, similar to euro kiwi in terms of channel moves. I like this completed move to the upside. If it touches the top of this trend line, like the twos or something. I like dollar short term. I don't have too much, bullishness on it in the long term.
Wow, guys, this is a fascinating thing I just discovered. Sorry to cut you off. The NASDAQ actually just jumped off of this. That is a very interesting reaction. Jobs numbers came out, and look at the NASDAQ hitting and rallying off of this level here. Not the reaction I would have expected, to be completely honest. I would have thought that the NASDAQ would be a little frightened by what looks to be stronger than expected job openings numbers could lead to further rate hikes, but perhaps it also just shows an increasing demand in the economy. Again, this is why jobs can be a little bit tricky when it comes in relation to the stock market specifically. Tom, what are you looking at here as the news drops? Are you which pairs are catching your eye right now, or indices, or whatever you're looking at?
Yeah, just looking at my gold trade at the moment. So obviously that's gives some strength to the US dollar, those better than expected figures. And what I always find really interesting when you have these news releases, who wins the battle between technicals and the data release? I don't know if you see that as well, guys. Sometimes you'll have a very good, this is a very good area to enter buys for gold to take it back up to here. But we've had better than expected US dollar news. So we would expect US dollar strength. And what I find interesting is that battle between those technical levels and the news that's been released, so this will be a really interesting area. Will that data keep pushing US dollar down, or will we find buyers in here at this technical level to push back up? And it's not always the data that wins. Sometimes the technical level holds its own and, it carries on as it was before. So, yeah, that battle will be interesting on this gold pair.
Yep, absolutely. And guys, I have got to cut the stream here pretty soon. I've got to jump off for a podcast episode. Thank you both, as always, for joining us. I'm going to be doing quickly an announcement of the giveaway winner. But before I do, let me thank Tom for coming on. Tom has his own YouTube channel. We got the link dropped in the chat. Click this link. Go subscribe to Tom. Tom, thank you as always for coming on. You made it last minute. I appreciate you coming in and just helping us out. This was a almost 2-hour stream, so I really appreciate the help.
And cheers, guys. Thanks for having me again.
Thanks, Tom.
As always, guys. Thank you guys for tuning in. Frank, you as well. Thank you for coming in. And real quick, I'm going to do the winner announcement here. Give me just 1 second. I've got a winner, and let me just see. Give me 1 second. We're going to be announcing the winner of the. Okay. So we have our winner, dfgsmith@gmail.com. dfgsmith@gmail.com. You are our winner for the EDGEFINDER giveaway. So thank you guys to everyone who entered the giveaway. If you did not win, dfgsmith@gmail.com. Let me make sure that is the right. Well, I can't see which email provider you have on here, but DFG Smith, you know who you are. Email from your email into the support chat, to the support email, support@A1Trading, and we'll get you your prize. Thank you all for tuning into today's live stream. If you have not joined the Discord, we're going to drop the Discord link as we end today's stream. I got to jump off for another podcast. Thank you guys for tuning in. We'll see you next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with ACAP, you can get tools like the EDGEFINDER completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.